Well, the last street fell for the second week in a row. The Nifty and the Bank Nifty were both down over 1% each. The mid-caps continue to relatively outperform. IT and Pharma saw the biggest gains this week. Hello and welcome to another edition of the Editors Roundtable. This week we take stock of the big Ambuja Cement and Sanghi deal. We tell you why insiders are selling stake via big block deals, and we put the spotlight on chemicals. I'm Sonia Shenoy, and joining me here on the round table are all the editors, and of course we have a special guest with us as well. But folks, it's been, a very volatile week, right?
Yeah.
I mean, give and take everything, there was a bit of a scare this week.
There was a scare, but I think, today's price action shows that maybe the market is ready to look through it. One day does not make a trend, but we said this on Wednesday as well, that, it's been a fantastically strong market, and when bad news comes in strong markets, mostly the market looks through it and kind of moves on. I'm not saying that gains continue, maybe the pace slows down or something, but that is par for the course. But otherwise, the Fitch thing happened on Tuesday night, US, 2 days, Wednesday and Thursday, the market fell 350 points. And it looks like that at least is behind us for now, I would say.
I think this week, gave a bit of a reality check as well. After 4 months, Sonia, 2 days back to back, we saw 2% cuts.
Yes.
I think people have forgotten that markets can fall as well. Everybody was like, okay, it can only go up and up. So I guess it was a bit of a reality check as well. But as Prashant pointed out, I guess because there is so much of momentum, it's a liquidity-driven rally. People are willing to ignore the bad news and to move on. So that showed up in Friday's, pullback as well. So strong close for Friday. But I guess this week also gave a bit of a reality check as well.
Oh, absolutely.
That one needs to be cautious as well on the downside.
Absolutely. And you know what? The buy on dip strategy has worked through the course of 2023, right? So perhaps this time it's no different. But just want to get Mihir Vora, our guest, into the conversation. But before that, let me also just put a setup on board and then I'll toss to him. If you missed out on what happened this week, it was a very volatile week that ended absolutely flat. So we ended down just about 0.5% or so. The Nifty by the end of the week held on to 19,500, and two spaces did well this week. One was technology, a big comeback over there. Tech Mahindra, HCL Tech, Infosys were up about 3 to 8% this week. And you had Pharma that came back in a big way as well. Lupin hit a fresh 52-week high after reporting a very strong set of numbers. And then you had platform companies like Zomato that stole the show on Friday after reporting profitability, a fresh high over there. And on the downside, the market this week chose to punish names like Hero MotoCorp and SBI that fell 7% post their numbers. But Mihir, coming on this, as Nimesh was saying, it little bit of a shake-up, a reality check is what the market's got. How do you feel about it now?
Well, it's just 3% so far as the correction goes from the top. So nothing to write home about. Just feels bad, but it's not much, frankly.
Okay.
Mihir, I wanted to ask you, though the headline index did decline, there were a couple of days when the headline index was down close to 150, 200 points, but yet the mid-cap index was in the green.
Yes.
So what do you make of the broader markets? The headline index, maybe we correct a couple of percentage points, maybe 5% from there, but what happens to the broader markets with the big money this fiscal year has been made out there?
Absolutely. But the thing is that there's no harm in being a little cautious, I would say. If you look at a lot of the sentiment indicators, there is a bit of overbought feeling, especially in the broader market, the mid caps, the small cap. So there is a case where too many stocks are moving up 10% every day, So that kind of euphoria is typically not very healthy. I don't mind a bit of a time correction, frankly.
All right.
You think we will get it, a time correction?
I think it's high time we got a time correction.
Will we go to 20,000 times? We got to within 8 points of it.
Yeah, exactly. And we are preparing for it almost, right?
I think Mihir is indicating we're a bit of Dravid mode, from that Sehwag mode that we were in. I think a little bit of consolidation. See the ball a little bigger and then look to back it out again. Get your eye in.
Sonia and Nigel had t-shirts ready, by the way.
No, we didn't. Don't say that. You're not supposed to say that. It's inauspicious.
We have made the t-shirts, but for 1 lakh on the sensex.
Okay, hopefully we'll see that as well. But Nimesh, you want to tell us what the dealing rooms were speaking about this week?
So, the flow seems to have tapered off a little bit. But again, it looks to me like more of consolidation, so to speak. Not like they're completely out of the way. And I'll talk about liquidity for, in this. But to me, the big headline this week was Morgan Stanley upgrading India to overweight from neutral in the emerging market basket. Again, I spoke to a lot of buy-side experts as well as to what this means for India, and are they late in the game, or there is something which meets more than what it should be. So I don't know. Only time will tell whether there is something big which is going to come, which Morgan Stanley knows and we don't know, and they went ahead and upgraded India. So that's something which stood out for me. As I said, in terms of flows, the FIs have not sold aggressively, even when the markets are falling 200 points on a daily basis. The feedback was they are not big sellers. Yes, the buying has gone down a bit, but again, from a liquidity point of view, the next 2 weeks are going to be quite big because next week there is the MSCI announcement which will come for the rebalancing. That's going to be important for some important stocks, but even from at the margin, from an India perspective, it's going to lead to some inflows as well. And the week after, there is a big FTSE event, which is going to be big, largely because the big stock to watch would be HDFC Bank. And in HDFC Bank, because of that rebalancing, you're going to see inflow close to $2 billion. That's the overall feedback. So next 2 weeks are going to be quite interesting from a flow point of view. But so that's broadly from an FI perspective. But again, there is one more thing which stood out for me was the fact that the promoters and the insiders are now again back selling large stakes through blocks. So that also stood out for me. But the big takeaway was a big Morgan Stanley upgrading India to an overweight.
So the selling of large stake by promoters, was it, any kind of figures that you have, and what is the relevance into the market?
Sonia, as you rightly pointed out, you'll surprise in the last 10 days, okay, the insiders and the promoters have sold stake worth $1 billion only in 7 days. And we saw what happened in June, July as well, right? Before the earnings season kicked in, there was so much of supply coming in from the promoters. Now, I guess this is going to only go up because most of the earnings are through and now the cool-off period has ended. But just to run through some important names which happened this week. Of course, the biggest one was Vedanta, where the promoters sold close to 4,000 crores worth of stake. There was DLF, where the promoters sold 1.5% stake, close to 700 crores. L&T Finance, Bain Capital, virtually sold out. They just have 0.5% left now. There they raised close to 1,000 crores. There was Amara Raja, where the private equity sold its entire 15% stake and raised close to 1,550 crores. So a lot of insiders have started. I guess in terms of feedback, what I understand from bankers, there are more lined up. Names like Zomato, Interglobe Aviation, AB Capital, all sorts of names are doing the rounds on blocks to come in weeks to come. So again, that's going to be a important event to track from a liquidity point of view, that the insiders keep selling every now and then.
With names like Zomato, with the strong earnings, even if SoftBank, right, Nimesh?
Yeah.
Even if the selling comes, you think it'll get absorbed? Not like there was nervousness, palpable nervousness a year back when these stakes were getting freed up and it started to come to the market. I don't think that's the case anymore, right? At least that level of fear.
I don't think so, because numbers are coming in a lot of these stocks, and more importantly, frankly, for these bulk deals and block deals, whether the block gets placed or not is a function of what the sentiment is in the market at that point in time. So if the sentiment is fine, I think it should be okay.
But in generally on the platform companies, are you getting a sense that now everybody is now focusing on profitability, which means that you can see a bit of chase from the institutions who missed out in the initial rally?
Yes.
You think that's the
certainly, and I think we discussed it last time. We have been building up positions in some of these stocks, the ex-IPO stocks, which were down by 70% from the listing price, etc. But we saw the franchise value, we saw the network effect, and there was an intrinsic value of that franchise and the number of customers, etc., paying customers.
Since we're talking about some of the top stocks, right? M&M was also one of the big stocks this week. Well, a lot happened, good numbers, Temasek buying stake in EVs, in the EV subsidiary. How are you feeling about this space and M&M particularly?
So while I can't talk on specific stocks, but I do think that post-monsoon, there is a hope about the momentum in the auto space continuing. While the last month's numbers were a bit of a mixed bag as far as cars, etc. are concerned, but tractors in general have been more resilient than expected. People always, for the last 1 year, people have been thinking that tractors have done so well for the last 2 to 3 years. So there is always a 4-year cycle, and maybe this was the 4th year, and we could see some weakness, but that's not happened, which is a good thing.
Sonia, we heard from Anisha today, right?
Yeah.
At their M&M. What was the final message? There was that one statement which we had discussed in closing as well, which is that we wanted to learn more about the business, but
very expensive learning process, I must say.
Is there still nervousness? What's the...
I think the overhang is out of the way because the management came and clarified. But having said that...
They will stay where they are. They're not raising.
They're not raising for now. They said that at some point, if they think it's a strategic fit, they might...
It's an open statement, I guess.
It's an open statement,
They've invested 400 crores. They said they can go to 9.9, but they will wait. They'll look for strategic opportunities. So
it was like an analyst talking about it, right? It was trading at less than one-time price to book, and that's why they found it, and they believe that it will be good. It sounds beautiful, right? And talk about an expensive lesson for a few hundred crores. It costs your own market capitalization $1 billion or so.
Will it be an overhang, Mir? What do you make of it?
prefer not to speak.
Okay,
on
single
that.
stock.
But you know,
Individual
Prashant,
yes.
but I'll tell you, apart from RBL, the fact, the presentation that Anish gave, and the details that is given in the presentation for M&M,
That was
you know,
very
including
impressive, I thought.
that was very impressive. You know, giving cash flows for all the verticals, and very specifically saying that these cash flows will not be used for some other businesses.
I caught a little bit of it. What I found is that he spent a lot of time talking about how they're going to be presenting earnings, and you know, not just the numbers themselves for the quarter.
And the fact that he gave a statement saying that, you know, the number of other incomes will go down. It will be very transparent, and no other incomes and no surprises in the earnings going
actually,
forward.
ever since Anish has come on board, he's put a very good capital allocation policy in place. You know, he's divided the companies into A, B, C categories, decided on what their return on equities would be. So I take your point that ever since he's come, he's done a lot of cleanup as well with the group. But Nigel, let's talk about the big deal that took away all your time this week. More on that?
It was exhausting, Sonia. I know
Time and energy.
Time and energy as well.
First half of the week was spent. Nigel was waiting for it.
Waiting
and
for
then
it.
came.
You know, I was sitting next to him when the deal broke, right? I could really sense his heart thumping. I could feel it.
I knew everything. I think at one point of time we were waiting for the deal to be announced. I said, Sonia, please ask me something more. But anyway, let's go to the big wall and explain that deal to you all. So the long-awaited deal, Ambuja Cements went ahead and they've acquired Sanghi Industries. We know the broad contours of the deal, right? It was close, enterprise value of close around 5,000 crores odd, for a capacity of around 6.1 million tons. But they have plans to up this capacity. So in total it will go to around 15 million tons. And in total, they'll be spending closer to around 8,500 crores, which means the deal was struck at roughly around $70 on a per ton basis. The way they're going to ramp up capacity as well should come up for you on the screen. That we know. What's the way ahead from here on? Well, the one big aspect that's taken place is that Ambuja Cements, now they've displaced Ultratech as king of the West as well as Gujarat. So as of now, Ultratech Cement, they had bulk of the market share, both in West as well as Gujarat. In the west part of the country, well, the current capacity is around 85 million tons. It goes to a little over 100 million tons odd. And in Gujarat, the rough capacity is around 38, 39 million tons odd. That's going to be going to around 45 million tons odd. So on both those two aspects, in the next few years, Adani Cement or Ambuja and ACC together will be taking over from Ultratech. So that's one point. Some on the street believe maybe a strategic move coming in from Adani Cement, it'll bode well for the times to come. Let's see how that plays out. Point number two, there'll be consolidation in the sector, which is positive, but will demand keep up? Because as of now, you just pull up some rough numbers. In the next few years, we're expecting capacity to get added, but we're expecting demand to go up by a far better pace. So on a CAGR basis for the next few years, capacity will go up by around 4.5%, but demand is likely to grow by 8.5%. And that's what's going to keep the utilization levels higher. But if demand doesn't go according to plan, that could be a little bit of a disappointment and put pressure on the industry. So that's point number two. And point number three, normally whenever we see a deal take place, those two companies that are doing the deal, well, they'll definitely be in focus. But more than that, this week, and particularly on Friday, you saw some of these smaller cement players, regional players, some of them 4, 5, 10 million tons odd, they were running up big time. You had Orient Cement that was up close to 10%, on Friday itself. You had even Sagar Cement that saw a big run. So some of these smaller cement companies that are trading at fairly attractive valuations, on an EV per ton basis, well, they could be up for grabs. At least that's normally the buzz once a deal takes place. The other way to look at it is, maybe there's a contra view. Since this deal got done at around $70 per ton, has the threshold limit from around $100 come down? Well, time will tell, but for the time being, more than Sanghi and Ambuja Cements, you had Orient Cement, you had Sagar Cement, both of them had popped up in trade. Back to you guys.
Okay, thanks a lot for that. Well, Mihir, open question to you, the cement industry, how are you feeling about it now? There's consolidation, there are big plans from large groups, and for an investor, what do you do?
I think this sector is ripe for further consolidation.
Okay.
Because the kind of investments required and the efficiencies required are going to get more and more difficult, and a lot of these small companies are really the original or second generation promoters, where the third or fourth generation doesn't really want to run the plant. They want to probably set up family offices or something like that. So I think some of them will be up for sale, and it's not a bad thing. There'll be efficiencies, and there are lots of structural issues in the sector which can be addressed with scale. So I think there is a case where some big guy can come in and drive those efficiencies.
And I think Sanghi Industries, one thing about the plant, I've gone there and personally visited it, around 7-8 years ago. So the limestone is there, and that's something that, a lot of cement companies don't have. The problem is the location, because demand is not that much out there. They're in Kutch, which is far away. it's like setting up the finest dining restaurant in a place where the real estate prices are not going up. That there is no traction in terms of rent as well. So that's just one way of looking at it.
That's a great way to put it.
And I'll tell you,
I'll
I'll put in one more. The clinker that they had was more than the cement. Normally you have that in a ratio. If you have 6 million tons of clinker, you can produce 10 million tons. So since it's a Friday, it's like you have a lot of soda, but the malt is less. So now the new play only has to focus on the malt because the soda is there.
I think you have enough malt for the weekend,
Absolutely.
right? Okay, let's do one thing. Let's take a break. On the other side of the break, we'll put the spotlight on the chemical space and talk about lots more that took place this week. Stay tuned.
Welcome back. You're with us here on Editors Roundtable. Now, the earnings season is underway, and I decided to take a look at the sector where there is across-the-board disappointment. I mean, there are very few sectors this time around where there is across-the-board optimism or across-the-board disappointment in terms of earnings. But there is one, chemicals. It was, in a way, well advertised. It was not as if numbers came as a shock or anything. But just take a look at the companies which have reported so far. This is not an exhaustive list, but I think this gives you a sense of how pervasive the disappointment has been. These are revenue numbers first up, which will come up on your screen. Year-on-year change, starting from Sharda Cropchem, where revenues dropped 23%, and of course they reported a loss at the net level. Atul Limited 20%, Clean Science 20%, UPL reported a 17% drop in revenues, SRF 15%, and so on and so forth. Deepak Nitrite, which reported yesterday 14% as well. So double-digit revenue decline for most of these companies. I mean, actually, the only exception perhaps is Navin Fluorine, where there was a sort of revenue growth. Look at margins and profit after tax numbers as well. And this is all year-on-year change. The compression is huge. Navin Fluorine, 160 basis point compression in margins. SRF was 500 basis point compression in margins. Deepak Nitrite, 550 basis point compression in margins. Look at profit after tax sort of levels as well, the year-on-year change. Again, anything between 5% to 40% decline in terms of profit after tax sort of numbers here. What this has done is it's brought down full year EPS estimates. UPL is the most, which has seen a 12% downgrade to full year FY24 earnings. Sharda Cropchem, SRF, Atul, I mean, between 2 to 12% is what I'm picking up. A few analysts I spoke to said, well, this is not enough. You need to see more because earnings expectations, consensus Bloomberg earnings expectations are still quite high. The next plate which will come up is basically the fall from all-time highs, peak basically. Clean Science is down 50% from the peak. Name like Sharda Cropchem is down 40%. You got Atul, Deepak Nitrite between 30 and 25%, Dhanuka Agrotech, SRF. The names are up on your screen. The last chart is what is the most interesting. Names like Clean Science at the peak, which is just 2-3 years ago, right? Used to trade at 100 times P, 1 year forward earnings, 100 times. It trades at 40 times earnings now. So huge compression on P multiple. Gujarat Fluorochem is the second biggest compression from 46 times to just under 20 times. UPL has gone from 17 times to 10 times. Deepak Nitrite 36 times to 24 times, and so forth. The point is, it's a commodity. Most of it is a commodity business. If you talk to analysts, if you talk to investors in the space, most want to be with the specialty curve, which is Navin Fluorine, PI Industries, Vinati Organics, etc. Most of the other sort of commodity chemical companies are still largely dependent on bulk commodities, trying to specialize, trying to move up the value curve, and that's where perhaps most find a little more comfort. Just one lesson as well from this, the last plate, especially the P compression, extrapolation of earnings on Excel sheets is dangerous. I think the clean science numbers kind of more than anything else for me makes that point. Mir, what do you make of it, the chemical space, and are you interested?
Interested, yes, because this is one sector which will show consistent volume growth for the next few years.
Yeah.
So I don't think anybody is going to doubt that. The last couple of years or last 3 years saw multiple tailwinds. We got volume expansion, we got price expansion, and when that happens in a continuous fashion, you get inventory gains also. So obviously with China coming back on stream and some of the global supply bottlenecks which happened during COVID going back, we are seeing supply coming back in a lot of these chemicals, and hence the price correction. And we are seeing the other side of the inventory drawdown. So there are some inventory losses and there are margin compressions. But I don't think the story is over. The China plus one, the India as a manufacturing hub, and our strengths in chemicals still continue. And most of the companies that you talked about are looking at anywhere between 15 to 25% volume growth for the next few years. So I don't think that's anything to worry about in the longer term. And as you rightly mentioned, valuations have come down very sharply. So it's not a bad thing to look at.
Okay, well, we have run out of time on the show, but thanks a lot, Mihir, for joining us here in the studio. Have a great weekend.
You too.
And to you viewers as well, have a great weekend. We'll see you again on Monday.